This is Jeff Herman from the Business Journal with the team from HD Davis CPAs and White Glove Payroll, here to talk to you today about the CARES Act.
My name is Tim Petrie. I'm the managing partner for HD Davis CPAs, as well as the founder of White Glove Payroll here in Youngstown. We have been preparing, like many of you in town, adapting to the new information that's been given to us what seems like every day. We have had an insane amount of collaboration in this slideshow between conversations with other CPA firms, other professionals, all the banks. Everyone has been as transparent as humanly possible. We are hoping to be able to answer as many questions as possible today and get through as much information as we can. But we are learning things new every day, and we are appreciative of everyone's patience during this crazy time.
So I'm Angela Johnson. I'm communications coordinator with HD Davis CPAs. I do some of the accounting and also some of the marketing for the firm, and then I also help out with some of the marketing for White Glove Payroll.
And I am Marcy Angelo. I'm the Director of Client Relations at White Glove Payroll, and I handle a lot of our client management as well as onboarding all of our clients. And then Angie and I work hand in hand to help with marketing efforts on both sides as we are sister companies.
I will now hand over the presentation to the team at HD Davis CPAs and White Glove Payroll to speak to updates in response to COVID-19. As a reminder, please use the Q&A function, and we're also monitoring Facebook for your questions. And thank you again for your time and attention.
There's a lot to talk about today, to be honest with you. We are going to cover the new Coronavirus Aid, Relief, and Economic Security Act, otherwise known as the CARES Act. We are going to talk about some other changes for Ohio and Pennsylvania specifically. As Tim mentioned, there's so much information coming out right now, and we, did our best to basically summarize what we do know, and then of course monitor everything as new information becomes available. We are going to be doing some Q&A throughout, like we did on the last webinar. We may have to limit that, but I know that Jeff has the capability to get us the list of questions for after the fact. So if we do not get to your questions, of course, we will address those afterwards as needed. So thanks, Jeff, for monitoring all of those. And we're gonna kind of hop a little back and forth here as there is just a lot to cover, but bear with us. And with that being said, I'll start us off.
Okay, and just to confirm, you are sharing your screen and everyone can see the next slide as it's advanced, the CARES Act, individual assistance and business assistance. So
yes.
Perfect. Okay, we got some panelist feedback, just once again trying to anticipate and make sure that everyone has a great viewing experience. So thank you. Please go on, Angela.
Perfect, thank you. So within the CARES Act, there is individual assistance as well as business assistance. So the stimulus package includes direct payment to individuals. It includes the expansion of unemployment insurance. There's the new Paycheck Protection Program, which is offering loan forgiveness. And of course, we're going to be going over that. Marcy will introduce us to that. We've got some credits available and also deferring of payment of payroll taxes for employers. And then some other provisions within there as well that we will cover. And keep in mind that this bill has almost 900 pages in it. So again, there's a ton of information that we are going to be throwing at you. And of course, it's a lot to digest for everyone, but just again, be patient as all of this information is being brought to your attention. So with that being said, this is an image that Tim actually found online, just to give you a visual of kind of what we're talking about here. So this is a $2.2 trillion relief package. And when I saw this image, I almost fell off of my chair, to be honest with you, because I didn't believe it. But this is the largest emergency aid package in the United States history. I mean, it might be the largest ever, but it is very large. Within the 2.2 trillion, is a $367 billion that is allocated towards the SBA program. And again, Marcy's going to be talking about that later. But to give you an idea of what we're talking about here, if there are roughly 30 million small businesses in the United States, if each of those businesses applied for a loan with the SBA with that $367 billion that's being allocated to them for this, each business would have about $12,200 available, which is not enough, right? So we want to emphasize that it's very important for you to start gathering the necessary information to apply for these loans and get your information together, start getting prepared, because you want to start getting the ball moving. And we are going to be talking about what this means, of course. So the first thing that I really want to talk about are these checks that I'm sure you've all pretty much heard of by now. Not everyone will be getting the payment. So you do have to have certain requirements and stipulations, just as with much else. But these are based on your 2019 tax returns if they've been filed. If not, then they're based on 2018. And if you don't file because you're under the standard deduction, but you receive Social Security benefits, then they will base it off of that form for your Social Security. If you don't file 2018 or 19 and you don't get Social Security, say you do file next year come this time, you would receive a credit against your tax liability then, as long as you meet the requirements, which I'm going to go over. You do have to have a valid Social Security number for yourself, your spouse, and any qualifying children on your tax returns. So if you're over 17, you would only get a check if you are filing on your own, independent of your parents. And there's still some gray area with this. Hopefully they'll come out with a little bit more information to answer some of the more specific questions we have, but this is what we do know right now. Payments will be made now through December 31st. And if you have provided your bank account information to the IRS on your tax returns, then you will be getting those payments to that bank account. If your bank account is changed, then the payment just won't go through. So they have something in place for this to be the case, but you don't have to worry about that. The next thing is that you'll want to keep in mind come next year at this time, you're basically going to have to recalculate this based on 2020 circumstances for you. And you're not going to have to pick this up as income on your tax returns. This is solely for your own benefit. So say, again, I'm going to go over these requirements in the next slide here, but say you get this payment this year and it's not enough based on what next year brings, you can take that offsetting difference as a tax credit on your tax returns. If you get too much this year based on what next year's tax return looks like for 2020, you don't have to do anything. And that's pretty neat. That's pretty interesting, because basically you're going to get it and not have to do anything about it if it's too much. So that's really nice to know. So now with, again, the next slide here, how much are you going to be getting? Individuals who are single, if you make less than $75,000 in your adjusted gross income per year, you're going to get the $1,200. This does phase out, and it does have that, it drops by $5 for every $100 you earn above the $75,000. For married couples, it's $2,400, so it's double the payment if you make less than $150,000 per year. And this phases out as well at $198,000 if you don't have children. And then it does drop by that $5 for every $100 you earn above the $150,000. And then for children who are under 17, they will be getting $500 for being the child. One thing you want to really keep in mind here, and this is very important, is that there are already scammers out there trying to get your personal and financial information. I know it's alarming, but just be very smart, as you should anytime, but especially now. People are a little extra vulnerable, of course, with everything that's going on. Don't be quick to just give your information. Don't do it. You know, if the IRS needs to contact you, if if you have a balance with them, they're not going to call you typically. They will send something in the mail. So if you get a phone call from someone claiming they're from the IRS or whatever organization, and they demand payment over the phone, it might be a scam. So just if you're not sure, ask around. If you get an email that has a suspicious link or attachment, don't click on it. This is how they're going to get you, especially now. It's very unfortunate, but that's just the reality of it. So we just want you to be sure that, you're being extra cautious as these things come along. Be very patient as this process continues. This is actually a screenshot that our IT guy sent to our team, just saying, hey, these things are actually already happening. Whoever this is trying to call him saying that they're for the COVID-19, whatever the case. And this is a scam. So just be extra careful and be extra patient, okay? Don't be quick and think something's wrong or you're in trouble. And with that, I think we'll conclude our first part if we want to answer any questions, and then I will hand it on over to Marcy.
The only thing I would add at this point in regards to the scammers, now is an important time more than ever to check on your parents, check on your grandparents, make them aware that this stuff is happening. There are phone calls going out, there are emails going out, there are fake Facebook accounts. There are endless amounts of ways that people are trying to scam people. So check in on those people and just reiterate to them how this process happens and make sure that they know that no one's going to call you. This will all happen through your normal channels of processing tax returns and IRS submissions on the IRS website. I see a question here from Rachel. Are all stimulus checks considered an extension of your 2020 tax return? So one of the things that has happened in all of this legislation is that all tax return due dates have been extended until July 15th, as well as the payment. There is nothing that you need to do in regards to that extension. You'll just need to treat July 15th as your new April 15th and file your tax return by then. Maria with another question here. Is there a process to update your checking account via IRS for direct deposit now? Or if your account has changed, should we just wait for the paper check? So a couple of different things there. Number one, the United States Treasury and the IRS are telling us that there will be an update for the IRS website to update information if you have not updated on your tax return for any reason. I would imagine that is quite the undertaking from a security standpoint. So I wouldn't be shocked if that took a while to happen. Right now, the process is if you have a bank account on file for a refund with the IRS already, that's where your money will get direct deposited to. If they attempt to direct deposit to an account that's closed, it'll get kicked back and then a paper check will get mailed. So my advice to a lot of people is if you haven't already filed your return and reported that banking information, you're probably best to just hang tight and wait for the paper check.
Okay. We'll move along then, and Marcy, I'll leave it to you.
Yeah, and I see a couple questions popping up about unemployment, so be patient and hopefully I answer them here in a few slides. So a lot of you saw that there was an expansion in the CARES Act for unemployment, not just for folks that are already collecting unemployment benefits, but those that are self-employed, gig workers, etc. So we are going to cover both of those. So like I said, be patient and hopefully in the next few slides, your questions get answered. So there was about $250 billion in the CARES Act that goes to unemployment. So the expansion portion is for those who are already eligible. So if you're already getting unemployment or you're in the process of signing up, you're looking to get an additional $600 per week for the next 4 months. So that caps out at July 31st. And the other addition to that is that typically you only get about 26 weeks, depending on the state that you're in, but this will extend it another 13 weeks. So if you need to collect unemployment past the 26 weeks, that's typical for most states, you'll get only $600 per week for that additional 13 weeks. And then all of this caps out at the end of the year. So one of the questions that we've been receiving is, what do I do as an employer? Because with this additional $600, my employees will be receiving more on unemployment than if they were working with me. And for some cases that's true, but from some of our legislators in the state of Ohio, they said they're working to see how this can be worked out. So the employers that did have to lay off some of their employees that are looking to bring some of them back, this doesn't hinder them wanting to come back because they're making more on unemployment. So that's just something that I want to clarify. And the other thing I'd like to clarify is you won't see the additional $600 per week right away. And we are still learning if that will be retroactive to when CARES Act went into place. So we have a few contacts at the Ohio Workforce Transformation Department, and with the Lieutenant Governor, we're keeping up on his updates to see when this will come. Next slide, please. So a lot of you have questions about the pandemic unemployment assistance, which is the portion that covers self-employed, consultants, independent contractors, gig workers, and another two people this covers are those that lack sufficient work history or that have exhausted their benefits. So those are two key portions as well, as we've had a few people ask, well, I've already collected unemployment in some ways, so I've exhausted some of those benefits. So now this will pertain to you. So much like the act we talked about last week, the Families First Coronavirus Response Act, most of the guidelines as to how you can qualify are the same. I'm not going to read them. You can see them there on the screen, but for the most part, it's anything related to COVID-19. So that's really the main point of this CARES Act and releasing the money for unemployment is to have additional funds available for those that are affected. You know, just in our office, we have folks with kids that are in school. So now they're juggling their job because luckily we're still working. And then, oh, well, I need to e-learn with my kids. So that's where some of this can come into place if your employer is suggesting or offering a layoff. So one thing that this does need to keep in mind, if you're self-employed but you're able to work remote or take some of the other paid leave benefits, then this will disqualify you. Just like the other unemployment you don't have to show you're actively seeking work. That's for Ohio and Pennsylvania. You see here that it is retroactive back to January 27th. So the Lieutenant Governor has advised us that there will be an entirely separate portal for Ohio. And we also learned that will be the case for Pennsylvania. And from what I'm reading, every state will have a separate portal or something coming through federally. So we're monitoring that right now. We unfortunately can't really tell you where to go to keep up on that, but know that we are monitoring it and we will get that information out as it's available. But also understand that those of you that are self-employed or gig workers or anything that falls under those categories, it will be retroactive. So if you've been laid off now or unable to work for several weeks, you will get caught up on unemployment. So like I said, keep watching for that extra portal to come up. I did see Governor DeWine in Ohio tweet earlier that ODJFS has been working on the normal portal. And again, like Jeff mentioned, with the bandwidth and being able to get more folks on, I know that's been a frustration for a lot of people. You know, you go to sign on and you can't get on. But like Angie has mentioned, the biggest part to all of this is just be patient. And that's really all we can do right now. So does anyone have any questions real quick that we can answer about unemployment?
Yes, we have several questions in the Q&A.
Okay.
We will start with a good question. I was furloughed from my full-time job in New York City, but I have my own photography business on the side. Doesn't make enough to pay the bills in its entirety. Will I be qualified for any unemployment? I don't know what to expect as far as payments and bills start flooding in, so I can budget correctly. So how do you handle that if you're laid off from your full-time, but you have a side job?
So furloughed workers are included in this. So of course, without knowing the specifics with what the extra gig does bring in, but essentially you have to report all the income you get. So whether that's Social Security or you have a side job or anything like that, that has to be in. But if you report that, then it should generate, even if the photography business ends up getting you a little bit less from the furloughed job, there should still be unemployment that you qualify for. Unfortunately, the furloughed workers are going to be in this separate portal, so it's still a little bit of a waiting game.
Okay, next question. What if I filed for unemployment 2 weeks ago when this first started? Being that I am a business owner, it may get flagged. Should I reapply now or wait to see what happens?
I would wait. It says right on the main website, do not try to change your application or reapply because you ultimately slow down your own process. I did see they've transitioned another 300 workers in the state of Ohio for ODJFS to work simply on unemployment, but you guys have seen the numbers and they are very bogged down. So they are getting through it, but if you're a business owner that would be an S Corp or someone on payroll, then you should eventually get your unemployment, even if they are a few weeks behind. And if you're not, and you're considered self-employed and need this other portal, then unfortunately, you're just going to have to wait a little bit.
So that's an important delineation to make for everyone, is that the definition of self-employment is unique right now, okay, in this specific regards, is that if you are unemployed and self-employed as a sole proprietor, like a Schedule C on your individual tax return, and that's how you get paid, then you have to go through this additional business-only resource for your unemployment. However, if you are a self-employed person that receives a paycheck from your own company, if your company is a C Corp, an S Corp, and you've got yourself on payroll, you're paying in unemployment taxes, and you've been laid off for your company, you can then file unemployment like a normal employee would, as opposed to the true definition of a self-employed person as a sole proprietor is going to have to follow this entirely different set of rules. So it's very dependent upon how you are filing for your business when it comes time to the delineation between self-employment.
Okay.
Great question. So sounds like, Tim, you just answered this question. As an employer owner that has had to cut my personal paycheck, should I also apply for unemployment like my employees?
The only word of caution that I would say there is that what the general population refers to as their paycheck and what an actual paycheck is sometimes can be two very different things. As if you are self-employed and you are just giving yourself a check and you're calling that your paycheck, then you're a sole prop. Yeah, that's a draw. You need to go through the self-employed process. If it is an actual paycheck, there's FICA taxes withheld. You're paying unemployment taxes. You're doing all the things that you would normally do for a normal payroll. Then you would go through the unemployment process as an employee of your company.
Okay.
You got one other one, Jeff?
Easy question, yes. Is this a federal website or do we apply through the state?
We're still learning that. So I do have a couple contacts, like I said, with the state, and there doesn't seem to be verification yet whether it will be a federal website or each state will have their own portal. So I'm hoping to learn that in the next couple of days. And like I said, we'll definitely send that information as it becomes available.
Right. We have a number of other questions here, and we do capture all these questions and log them, and we will get to each one of these individually. But to keep things moving forward, let's continue with the presentation, and we'll try to feather these in as we progress.
Okay, sounds good. So some other individual provisions are the waiver of the 10% early withdrawal penalty for retirement distributions of up to $100,000 if it's for the coronavirus, if it's for purposes of the coronavirus. So it's for an individual who's been diagnosed with it, and you'd have to provide like a CDC approved test, or an individual who experiences adverse financial consequences as a result of quarantine or being laid off or the business is closed. So if you are taking this early withdrawal, then you're not subject to that 10% penalty as long as you meet those requirements. And then the income is subject to tax over 3 years, and you may recontribute the funds to a qualified retirement plan without regard to contribution limits if made within 3 years. There's also this new waiver of all required minimum distributions for 2020. So this has no bearing if you're affected directly by the coronavirus or not. This is just for anyone who takes these RMDs for 2020. You don't have to. So then you wouldn't have to pick that up on your tax return as income. We also have this exclusion of up to $5,250 of income for employees if their employer makes payments for the employee's education loans. So this can't be for an employee's spouse or child or anything like that. It has to be actually for the employee, and the employer can make these payments directly to the employee or directly to the lender, and the employee would not have to pick that amount up as income on their taxes. Now, it does seem to be that the employers can still deduct these payments as they would wages. They just would not be taxed to the employee. Also, through September 30th of this year, we don't have the federal student loan payments anymore, so you don't have to make those. There's no interest accruing on those, so that's good. And then also there's no garnishment of wages, Social Security, and tax refunds for student loan debt collection. We have some changes happening for charitable contributions. There's now a $300 above the line deduction for those. And there's also this elimination of the limitation for individuals who make these contributions in 2020. So normally, if you make charitable contributions, it's there's a limitation of 50% of your AGI. Now it's unlimited. And I mean, you know, that kind of goes without saying that that's really nice, because, you know, charities can use help, and obviously charities want to help out more. So those provisions are pretty nice to have in there too as well. So we have another section for questions if we want to take maybe a couple more here, Jeff, and then we'll just move right on into some more things with Marcy.
Sure. Yeah. Thank you. We have a lot of questions to get through too, so just scanning to see which ones would provide the most insight for all attending. And then once again, the individual questions we can follow up offline. Basically, I had 2 employees' determinations come to me as approved. One said it was COVID-19 layoff. The other said she was laid off due to lack of work. Both determinations say proportional charge is 100. Is that correct?
So did that person get the request to employer for separation from ODJFS? Is that what they're referring to?
Yes, I believe so.
Okay, so the person, there's 2 things, probably 3 things that could have happened here. 1, they didn't use the mass layoff code. 2, they used a date that was too early for the mass layoff code. Or 3, they picked the wrong item essentially when they put lack of work or cut hours. And that's what's kind of drawing these back to the employer from ODJFS. So they'll still get approved, but the employer has to provide additional information, which, as you know, if you have dozens of employees, this can be very time consuming. Tim, I don't know if you have anything else to add on that.
I was responding to a question here. In regards to those responses, we're not sure. We've seen a couple come in. We've immediately responded to the unemployment letter saying, hey, all of these were a layoff due to the COVID. So we're not sure how the most efficient way to process that with the state of Ohio. Naturally, they're overwhelmed, so we're trying to work with them as information becomes available. But I wouldn't be shocked if a ton of business owners got those types of letters. I mean, there will be a lot of them. All I can say as a general piece of guidance is that you should undoubtedly respond. I think that the generic response that we have given to a lot of our folks that have received it is writing a letter directly, responding to it, saying, specifying why people were laid off so that there's no confusion about that. So I can assure you that the answer is not to ignore it, because I think that a lot of people have the tendency to just ignore letters from the government sometimes. But what I can tell you is a lot of this stuff happens automatically via computer system. It's not like there's some unemployment czar sitting somewhere sending all these letters out individually. A lot of the stuff just happens from a computer system. So if you respond with a letter that explains why the person was actually laid off, then you're going to have that information on file with them, and they will typically process that response pretty quickly, rather than automatically just continuing to get letters or it negatively impacting your unemployment rates.
Okay, I have another good question here. And this pertains to, I'll summarize the question, but business owner looking to apply for SBA loans. Therefore, that means continued paychecks for the staff. However, the staff has already put on unemployment, which they already applied. How do you work through that situation?
That's a bit of a loaded question. I will. The guidance that I can give you there is if you're going through the SBA loan process, which we're going to get to some of the information on that, a lot of the forgiveness of those loans is going to be dependent upon your payroll. The intention of the loans is to get people off of unemployment and back to work. So the hope will be that even if those people are getting unemployment, that you can give them a call and tell them to come on back to work when it's time to go, and you'll be able to utilize those payroll costs in your SBA loan forgiveness calculation.
Okay, I would say at this point, let's continue on with the presentation, and we will be still monitoring the Q&A and answering these questions directly.
I did send a few people responses, so hopefully that helped, and hopefully everyone else can see that. But in the interest of time, we will keep moving. Like Angie mentioned, it's very, very important, the sense of urgency when we start talking about some of the loans available through the SBA. You can see the math here, and while $367 billion seems like a lot of money, when you start putting it throughout 30 million small businesses, it's not very much. So
the only thing that I want to make sure that we address, because I know that there are a handful of our banker friends that are participating in today's webinar, I need to make sure that we're hammering home a couple of things for any and all of you that are thinking about applying for these loans. Your bankers are undoubtedly overwhelmed and inundated with phone calls and emails requesting all of these loan applications. So when we're sharing these statistics with you, we're not sharing these statistics with you to hurry up and call your banker. We're sharing these statistics with you so that you can get all of your information together, so that you can be prepared when they are ready. The banks are awaiting the information as to how to accept these applications. There are application forms that are available. We're going to go through those a little bit here in a minute. But the important thing to remember is that you will need to ensure that you have all the right documentation, most importantly, in the most accurate group of information possible. Because if you don't, a lot of these loans are going to be granted first come, first serve. And if you don't have the correct information, the way that I would envision this happening is that you get knocked kind of back down to the back of the line. So the key is not how fast you can submit these applications and loan packages and information in your bank. It's how accurately you can do it, how detailed it can be, so that the bank has a clear understanding of all of your information. So it's very important for everyone to understand and be empathetic to the bank situation, is that many of the banks only have a handful of SBA people. This is a going to overwhelm that system immediately. So all you can do is be patient and try to have the correct amount of information available and ready for your banker to help you through this process. So I want to make sure that, and I'm going to probably say this over and over again throughout, because it's probably the most important part of this section, is just encouraging people to be patient and diligent about collecting a clean set of information for their bankers to use to help you.
Okay, so a lot of you have heard of the PPP, or the Paycheck Protection Program or loan. So yes, you've heard that it's forgivable. There's certain stipulations to that, which we will cover here in a little bit, but it's meant to keep your employees on if you haven't already laid them off, or to bring them back. For general terms, it's for businesses with 500 or less employees. You must apply by June 30th. One of the big things I want to touch on here, especially for those of you that are in a restaurant or food service industry or have a franchise, the general term of 500 or less employees will apply in just physical locations. So if you own a restaurant group that has 8 restaurants, so you have 1,500 employees total, that won't disqualify you from being able to use this, because it will go per each physical location. So as long as those 8 locations have less than 500 employees, then you can essentially apply for this loan for each of those physical locations. So that's just something I want to touch on there, because I'm sure some people had that process of thought as to whether or not that applies. So it's non-recourse, low interest rate. We're seeing a few different things here, but for the entire term, it shouldn't be more than 4%. And then there's payment deferral options. So I don't know if, Tim, you have anything to add, or we should keep going on this.
I think the important thing to add here is there are 2 separate loans. So for those of you that have a variety of questions, some of these other loans may apply to you. So you'll see in a couple of slides some of the differences between the other loans.
Yep. So just a little bit of math here so people can understand that the PPP program does come down to a lot of things, which we will get into, but one of the key portions of this is your monthly payroll costs. So if you had payroll for the entire year in 2019, you would take 2.5 times your previous 12-month average monthly payroll cost. So if you're a client of White Glove Payroll, we can certainly help you get that information. And then if you weren't a business in 2019, you would take your monthly payroll cost from January and February of this year.
So one thing to mention here is that in regards to this, we have to be overly prepared for the documentation that may or may not be required in regards to these. What many of you will find out probably very soon is that typically the SBA process is pretty intrusive, to say the least. So what I'm trying to make sure that people are prepared for with our client base is making sure that you have a variety of different pieces of information to support your calculations. So the payroll costs are, there's a relatively specific calculation that's been provided to us in terms of how to calculate payroll that is inclusive of employee benefits and health insurance and sick pay and things like that. And then excluded from that calculation are things like federal payroll taxes and federal tax withholding. So again, it's important that, you know, a lot of you have probably already seen the application that we're going to look at later. The application is relatively straightforward in how it asks for payroll cost. Just remember, you need to prepare to have all the information that you can to support that calculation and show proof of that calculation. So things like copies of your 941s, from your payroll provider, you should be able to get payroll summaries. We will have more specifics as each bank provides them to us. But for now, again, the word of caution is to be over prepared, have access to as much information in support of your calculations as you can. And very importantly, for a lot of the folks that aren't accustomed to this, all of this stuff is going to need to be in the digital format. It's not paper copies. So all of these applications, as far as we understand at this point, will be submitted online. So you need to have all this stuff ready to be scanned in if you don't have a scanner at home or wherever you're working at. It's important that you have a plan in place to get all these documents into digital format.
So here's a little bit of a comparison here based on if you're a sole proprietor, independent contractor, or you have employees and what the payroll costs include. As you can see, it's pretty straightforward. The one thing to note here is it doesn't include the federal taxes. And again, like Tim said, whether it's us or someone else that does your payroll, you can pretty easily get this history. And I did see a quick question pop up, the time frame. And if you have payroll for all of 2019, it would be January through December. And then if you're a new company that didn't have payroll in 2019, you need to provide for January and February of 2020. So I did want to touch on that real quick. There are some excluded payroll costs, which would include if someone makes more than $100,000. So you see that there under the sole proprietor, independent contractor. So it would have to be annualized if one of your employees, say they make 150,000, then you would annualize it to 100,000. We're going to get into some of the employer payroll taxes and what can be deferred from that. But you just wouldn't include the federal taxes when you're getting this payroll history or payroll summary to provide.
And one thing that we've seen over the course of the last 24 hours, we've received a little bit of guidance from the United States Treasury in regards to some of this stuff as they've been distributing it to the banks. The two of these groups will be different forms of applications. Okay, so the people that have employees and have payroll are likely going to have one set of rules and one application, and then the folks that are self-employed, there's a list of questions on here in regards to our friends that are realtors, that maybe are self-employed in other formats. As those things will apply to you guys, will be a slightly separate calculation and format. What we are seeing is that the rules for those folks are going to be probably at least a week behind everybody else. So everything that we've been given thus far is relatively clear about some of the information to collect for people that have employees and have people on payroll. In regards to some of these calculations and some of these applications for those that are sole props or independent contractors, we are going to await a lot more information for you guys. I would envision, in the coming weeks, we should have more information about that. But that's something that a lot of you will have to hang tight on and wait for more clarification as it comes, because it's a very complicated question as you get into that application as to what a sole prop or individual contractor, independent contractor actually makes and what maybe they would be entitled to get in terms of supplements. So I think there's a lot of questions that they have to figure out internally so that they can be as prepared for those questions when they come out. So those of you that don't have employees on payroll, know that you'll be about a week behind everybody else that has employees and payroll, because there are just so many more questions and so many more unknowns about how to do those calculations. Whereas the employees are relatively easy to calculate. I can calculate payroll by generating payroll summaries and looking at 941s and doing all those things. But the subjective nature of self-employment and deductions and what you truly make is going to be much harder for them to determine. So just give that group a little bit more time.
And Tim, to build upon this, is it fair to say, and we have a number of questions pertaining to this, people that are sole proprietors or LLCs that don't really even create a paycheck for themselves, they just move money from their business checking to their personal checking, essentially taking distributions. Is this a call, I know these are extreme cases, but is that a sound business practice as is, or do you recommend all sole proprietors effectively get on a method of creating payroll for themselves and because in this situation it creates extra
well,
complexities?
it really, that's undoubtedly something that is worth having a conversation with your tax professional or CPA about. A lot of that answer is dependent upon how much you make and what type of entity that you are eligible to file as, because the barber shops of the world, the real estate professionals, the folks that are earning their money by the work that they're doing, are typically tend to classify as sole proprietors. When you get into a situation where some of your money is not necessarily earned by the direct work that you're doing, and your money maybe is earned by your group of employees that work for you, or the inventory that you've purchased, or other investments like vehicles or semi trucks or things like that, you can start to get into the conversation of, well, maybe I would qualify to organize as an LLC and file as an S corporation and put myself on payroll. But there are a lot of considerations there, like the cost benefit of going through that entire exercise, and then the subjective nature of if you're taking advantage of that business setup as an LLC, filing as an S corporation and putting yourself on payroll, you have to pay yourself a reasonable wage. So you get into that subjective nature of defining what a reasonable wage is for that entity. But I would say that this may be a great time to use this as your excuse to look at how your business is structured. Look at how you are paying into things. Does it make sense? Probably not a great time to be calling your CPA to have that conversation, because things are a little bit crazy with all of this. But maybe put it on your list as to something to talk to them about in maybe August or September before the end of the year. But it's something that is undoubtedly worth having a conversation and looking at, because the structure of your business is important for a variety of reasons. We've got a handful of our attorney friends on this call that they'll tell you a variety of reasons for their purposes why it's important, but definitely worth something looking at. But I wouldn't say that it's not like you can do anything retroactively at this point to then make yourself eligible for any of these benefits that are being given. So typically the answer right now is whatever happened to get to this point, and those are the benefits that you're going to be eligible based off of how you are structured. And then as we see the things change over the course of the future here, then maybe you can change your setup of your business.
So the only other thing I want to add on this slide is the excluded payroll costs. Because the Families First Coronavirus Response Act went into effect today, the sick leave or the family leave from that act is considered an excluded payroll cost. So if someone has a more specific question, we can chat offline, but I did want to add that. So with the PPP program, you'll want to, borrowers are going to have to confirm some things. You kind of have to be able to prove that this is because of COVID-19, which, probably won't be hard for most of you. You'll need to be able to use that money for payroll, the mortgage or lease interest, utility payments. We get into that here in a little bit. And they have not received amounts for the same purpose or duplicative amounts from February to December. So that's something that's important to keep in mind. The necessary is a little bit gray right now. So like Tim mentioned, we are still looking on some more guidelines from SBA to confirm some of these things.
Yeah, that's one area that we've been trying to use some extra caution in. If you go back to that slide for a minute, the C, and again, a lot of this is we're taking this information as it's given to us, right? So normally we have a year at least to interpret a lot of this data. We have the information, we have the time to interpret, the bankers do, everybody. So right now we're really going off of the information that's given to us, a couple of days ago. So the important part of this section is that no other pending applications are duplicative of the covered loan request. My concern that I have is if you apply for one of the other loan programs, like a traditional SBA loan or what's referred to as the Economic Injury Disaster Loan, the EIDL, which we'll talk about a little bit more in a minute. If they're happening at the same time, you can slow down your process. You potentially could slow down your process. We don't know that as a true answer, but I would caution people to not try to do too many things all at once, because if you do too many things all at once, you know, the one may slow down the other, or they may you know, force this process to go a little bit more arduous, and again cost you more time. Time and accuracy is the most important part of a lot of these loan applications. So be careful in not just going and applying for everything. You need to make sure that you're having conversations with your professionals. You need to make sure that you're having conversations with your commercial bankers and your CPA and your legal and or HR professionals, especially now more than ever. Now is the time that you employ these people. Now is the time that you've retained professionals to help you get through something like this. So, and I can speak for a lot of the CPAs right now, is that I've been on the phone more than I think I ever have in my entire life over the course of the last 4 or 5 days. And that's coming from a guy that normally is on the phone a lot in April for people with their tax returns. So again, be patient with all of us, be patient with the bankers, be patient with the accountants, be patient with everyone, because we are trying our best to make sure that we can answer everybody as fast as possible, but most importantly, as accurately as possible. So just use caution with some of these things. That's one thing that a few of us in the CPA and banking profession have talked to about some potential issues, so be aware of that.
Okay. I have a good question here. Could payroll financing be utilized to free up capital to potentially merge or acquire other distressed businesses?
Well, so you'll see in the application, and going back to that slide again, that you go back to that slide one more time, Ange, please. Some of the things that you're going to have to sign off on when you apply for this loan is that you are attesting to the fact, and typically under like penalties of perjury, right? When you apply for loan applications, you're attesting to the fact that the loan is necessary to support operations due to the economic conditions, and that you're going to use it to keep people on payroll. So, you know, that doesn't mean that you can't use that money to keep people on payroll, and then maybe it frees up other savings that you would have had, or other monies that you would have had independently, that you can then use to work on those distressed businesses. But the important part is making sure that, you know, this is not like an Apple terms and conditions checkbox, right? This is not something that you just blindly check and move on. I caution everyone to truly read the disclosures that you are signing off on when you're applying for these loans, because if you're not truthful in applying for these loans, there could undoubtedly be legal and or IRS and or other implications that come back to you for not truly ignorance is not a good excuse for just checking the box and signing something. So be cautious in how you are, in what you're signing off on when you're signing these loans. But at the same time, you know, document your process, document why you feel that it's necessary to support your business during the economic conditions, why you're concerned that it's going to impact your business. Those types of things are important to document now. I think that over documentation is undoubtedly the key to not only getting your application through and potentially approved, but making sure that you get to keep it and potentially have the ability to have any of it forgiven later. So document, I think, is the key here, and making sure that you have all that information ready.
Okay.
Hey, Jeff, you know, I got to interrupt real quick. I think for time purposes, we probably should keep the ball moving because we do have a lot to cover. Okay. So, you know, keep a log of those questions, and we'll, like we said, we'll certainly get back to you after the fact, but we want to make sure we're delivering this information to you now. So
excellent.
And I do know some of the questions I've been seeing will be answered here in the next few slides, so just be patient. As far as the loan forgiveness goes, It will be during the 8-week period after the loan origination date. And as we mentioned, it will need to be spent on payroll, interest on mortgages, rent, and utilities. Utilities would be electric, gas, water, transportation, telephone, and internet, just to clarify that. So the loan forgiveness cannot exceed the principal. So that's something that's pretty important to keep in mind. So I did see a few people ask about if they already laid people off, should they bring them back? And the key to getting 100% forgiveness would be that from the loan origination date that you have the same number of full-time employees that you did prior to all of this taking place. So can you go to the next slide? I think this does a good job of kind of discussing what happens if you only get partial loan forgiveness. So if there's a reduction in the number of employees, so let's say that you had 100 employees, but you could only bring back 80, that's where that would kind of come in. But if you have a reduction of greater than 25% in wages paid to the employees, then it deducts by both of those. So you're gonna wanna keep an eye on your monthly payroll costs from 2019 or the 2 months in 2020, whatever takes effect, to make sure that the numbers align, because that is what will come into play as far as receiving the 100% forgiveness. And then real quick, as I know we have some seasonal employers on here, your average number of full-time equivalents per month would be from February 15th, 2019 to June 30th, 2019. So I know we mentioned dates for some of the other industries, so I did want to mention that. Tim, do you have anything to add on the forgiveness part?
Not a ton, other than a lot of the questions in terms of how this will happen are yet to be answered. Right now, I think the key thing to hammer home is that any money that, once you get this money, it's important that you document how you spend the money. It's important that you keep copies of checks. It's important that you keep copies of all the bills. It's important that you are over documenting all of this stuff, because just think about why. Think about the fact that the federal government is potentially forgiving a substantial amount of money to you, and they're not going to do that unless you've got all your ducks in a row. You know, now if it's Jeff, I'm sure Jeff will just send him a letter that said, look, I use the money, don't worry about it. And they'll just say, yeah, Jeff, you're a great guy. I trust that that is accurate. They'll just forgive the whole thing. For the rest of us, though, I would encourage everybody to over document. Make sure that you're keeping all those copies of those checks. We're not sure how the process will work in terms of how to submit all that information. We'll find out in the coming days, weeks, months, probably. But having yourself a system so that you can keep those records in a nice, clean, neat, organized fashion will be important.
Yep. So go ahead to the next slide to kind of look at a little bit of math here again, so you can kind of determine real quick what you could potentially get for the loan, because it is determined off your payroll cost. Again, this is in theory, we're still learning. The applications for small businesses open Friday, and then the following Friday for the other folks. So we anticipate in the next 1 to 2 weeks having a lot more information as SBA guidelines become available. Go ahead to the next slide. This is a list that was provided to us by one of our banking friends, and Tim has talked to every bank probably in a tri-county area in the last 24, 48 hours. A lot of this information actually just became available fairly late in the afternoon yesterday when the application became available, which we're going to talk about here shortly. It actually came out a little quicker than we anticipated. So we tried to add as much as we could for today to at least touch on it so you have an idea. But this list here is pretty self-explanatory. I think the main thing I want to touch on here is number 5, your P&L. This is where HD Davis will come into play, or whomever does handle this for you. It's very important that you have your financials up to date, because we don't want this to be the reason why you can't get in because your financials aren't up to date. I think we had talked this morning about it's probably pertinent to have everything month to month. It could be quarterly, but we aren't 100% sure yet. So I think it would be in the best interest to have it month to month, just in case, like Tim said, over prepare, have as much information as you possibly can.
And huge disclaimer at this point, right? A lot of the information that we're being given is as early as it could possibly be. So we don't know if you will definitely need everything on this list. We don't know that you won't need 20 more things on this list. What I can tell you is that for any of you that have gone through a loan application process, no matter what, from a commercial standpoint, this is your meat and potatoes kind of stuff, right? You need to have your legal documents showing that you're a real business and incorporated in the state of Ohio, your operating agreement, your driver's license, your personal financial statement. These are things that are very normal for a bank application. So it's not like this is something that has been reinvented already. This is a typical list from your normal 7A applications. They may have an express way of doing some of this stuff. They may have a digital way of doing some of this stuff, but all I can do to give all of you the best advice to put yourself in a position to potentially get the loan is have all the stuff ready, because if you have all the stuff ready, you won't be scrambling when you're filling out your application online or you're working through this process. So it's important that you try to get as much of this stuff as possible. And again, we will continue to distribute, and all the banks will continue to distribute the information that they will specifically require on all of their ends. But that's the disclaimer I got to give at this point, is that we're distributing the information as fast as it comes available. Sometimes that's typically not how we roll as accountants. We're overly conservative. We wait. We're hesitant to send stuff until we know the 100% answer, but we're trying to over prepare as much of our client base and our community so that they can have the tools necessary to get this done.
Yep. So this is kind of a bullet point, some list of items that we learned yesterday. Most of it we have covered. I do want to touch on bullet point number 3. So I did see a couple people mention that due to likely high subscriptions, at least 75% of the forgiven amount must have been used for payroll. So again, this is not 100%, but this is the guidelines that we're seeing. More information that was released on the Treasury website yesterday. So definitely keep up on that. We will also be keeping up on that. Like Tim mentioned, right now, a lot of what we can safely assume is that what you need for any other 7A, you would need for this, but we're still learning. So all loan terms will be the same for all applicants. No penalty for prepayment. So a lot of times you'll see a 5, 4, 3, 2, 1 and other SBA loans where there is a penalty for doing that. But a year and a half down the road, if things are a lot better and you can prepay that, you won't get a penalty for that. And this is where we've been talking about being patient, but also proactive, because funding is on a first come, first served basis. So here's the application. Hopefully most of you can see this pretty good. It is available on the Treasury website, so you can go look at it.
And again, I have to give the same disclosure here, is that this is an application that was shared with us from one bank and the United States Treasury. So what I'll tell you is that I have no guarantee that this is the exact form that will be required, and or that you don't have more information. This, to me, and the reason that we've included it this quickly, is to give you an illustration of what you can anticipate coming as a result of this process. So it may be slightly different. There may be more disclosures. There may be more certifications. There may be more documents to be required. But again, if you can prepare with what you have now, you can at least be more prepared when the time comes. But I can't promise you that this is the end all be all for all banks. This has just been some of the information that has been given to both us and the banks from the United States Treasury. Sorry to interrupt.
No, that's okay. So a couple questions here that I want to touch on or confirm. So someone asked, do we apply with SBA first and then go to our/a bank? What website do we use to apply for SBA assistance? So to clarify, this triple P is available through a 7A lender like your bank or credit union. The SBA is also providing an EIDL, which we're going to talk about next, and we talked about last week. It is very important to understand they are two totally different things. So as far as this triple P that we've been discussing, that would be something you'd want to have a conversation with your bank. And then someone else said, you said don't rush to apply, but then it says funding will be on a first come, first serve basis. So yep, that we wish it was a little bit easier, but.
Yeah, the answer is don't rush to apply with the wrong information. You need to make sure that you have as much of the correct information, both about the data that you're putting on these forms and that's specific to the bank that you're applying with. So there's still a sense of urgency. Undoubtedly, there's a sense of urgency in getting these applications in, but just getting them in isn't the most important. Getting them in correctly is by far undoubtedly the most important. So it's going to be very important to work closely with your financial professionals, your CPAs, your accountants, your whatever, and your bankers to make sure that all of you are collectively doing the same thing together to have the most accurate information as soon as possible. So accuracy first, and then probably timing in a very close second.
Yep. So go ahead to the next application. I think it's important now to get to the EIDL because that's coming up in a lot of questions here. And like I said, these are two very, very different opportunities as a business owner. So we did discuss the EIDL last week during our webinar, but just to touch on it, the number one thing is the application itself / process has changed at least 3 times in the last week. As of yesterday, it was back to a web-based application. It started as a web-based application. Then there were forms you could upload, and now it went back to a web-based application. But this application is now a little bit different than the first time. So again, that whole being patient, very key. Not my strong suit, but something I'm working on, so we can all do that together. So for the EIDL, Economic Injury Disaster Loan, terms are up to 30 years, up to $2 million. Pretty straightforward for a business, 3.75%, for a nonprofit, 2.75%. We did learn from NADCO that $17 billion for SBA payment of borrower principal, interest, and fees for a 6-month period beginning with the next payment due. So we're looking into this as it is an actual debt forgiveness for the EIDL. So again, completely different from the triple P. You can go to disasterloan.sba.gov to learn more. You can also go to that website to apply for the $10,000 advance. So funds will be made available within 3 days of a successful application. It's 100% forgivable. It's essentially the SBA's way of stepping in, helping small businesses to get you through the next few weeks or couple months as we learn some of these things and guidelines become available. So again, here's a little bit of a difference between the two. They have a lot of commonalities, such as what the money can be used for. But again, one thing to hit on, they are two totally different things. The other thing to hit on is you cannot use the money for the same thing. So Tim mentioned that earlier, but that's something else that we want to continue to clarify, that you can't use, if you happen to get both, you can't use them on the same exact thing.
And typically, what we've been explaining to our clients is that if you were able to get both, the EIDL can be used to reimburse you for money you spent prior, and the payroll protection program is used for money that you will spend in the future. So just if everybody just remembers that, mnemonic of EIDL is the past and payroll protection is the future, that's the only generic guidance we can give to people in terms of how the money can be used, or at least how they're telling us it can be used at this time.
Yep. So I think we will try to answer just a couple questions here. We still have quite a bit to cover. I've seen several questions here about what does full-time equivalent mean? What does part-time mean? So far, the only thing that I've personally seen is based on ACA guidelines, which is about 30 hours makes you full-time, and then 2 part-time folks at 15 hours makes that a full-time equivalent. So Tim, I don't know if you have anything to add as far as that goes, but again, still waiting on some of those guidelines.
Yeah, we've seen some things in regards to just actual head counts versus full-time employees. I don't know the answer to that yet. I do know how it specifically applies to those in the hospitality industry, is that it's head counts in regards to its head counts and physical locations for the hospitality industry. And that is the calculation that you'll use to determine if you're eligible based off of the 500 employee mark. But in terms of your number of employees on your application, I would wait to fill that piece in until you know for sure, because it will be relevant. That number that you're going to put in there is going to be important in your calculation of your loan forgiveness. So it will be crucial that you get that information in there correctly once the exact guidance is given. Again, the guidance is rolling out every day, every hour, but that is a specific section that I would make sure that you have a conversation and confirmation with both your CPA and or commercial banker about how that calculation is done and the supporting documents that will be needed for that, because that will come into play when it comes time for that loan to be forgiven.
Okay, so I tried to answer a couple questions via text there, but to keep things moving, now to add on top of all of that, here is an entirely separate program from everything else we just talked about. So this is the Employee Retention Credit, and it's a refundable tax credit for 50% of wages paid to employees. So it can be made available to employers who have been affected by COVID-19, fully or partially suspended, gross receipts declined by more than 50% when compared to the same quarter in the prior year. Again, a very gray area, 2 different scenarios. A lot of employers can say they've in some way, shape, or form been affected by COVID-19. The credit based on qualified wages paid, we're still learning some of this, so bear with us as we try to figure some of these things out as the guidelines become available. We do know it would provide a refundable tax credit on your corporate tax return. So a little bit different than the way the other ones worked that we talked about.
And this is one that has a lot less urgency. This is one that will happen in the coming quarters, if not on your tax return at the end of the year. That we bring this up so that you add it to your list of things that you need to have a conversation with your CPA about between now and the end of the year. But not nearly as time sensitive and or urgent and or probably impactful as maybe some of the other stuff is talking about, at least in the very short term, which I think is where the vast majority of most of your concerns are at, is keeping the lights on today.
And then one of the other things about this and some of the other things, it can't hurt to over communicate with your payroll provider to be tracking things and maybe putting them in a different column as far as wages goes in a certain time period. So when the time comes that we learn more, we can figure out how that will work. So here's another entirely different option for some employers, which allows the deferral of payment of employers' 6.2% Social Security tax. So it would be paid over the next 2 years, half of it by the end of next year, half of it by the year after. If you go to the next slide, there is an example. So this is in our program, so you can see where it is highlighted there. If an employee it's up to $10,000 in wages, if they were paid that would be the employer portion that could be deferred.
Something very important to mention, because we were very concerned about this internally, about how a lot of this would be administered on the upcoming payroll tax returns that are due next month, or this month. I'm sorry, it's April. the eligible amount of deferral doesn't start until the end of March. So you would have basically 1 week of potentially deferrable payroll taxes. And I would venture to guess at this point that 99% of payroll tax softwares will have no idea how to handle this, at least for that one last week. So I probably wouldn't encourage people to take advantage of it for that 1 week of the first quarter of 2020, but pay close attention to this as an option to provide some liquidity to you, starting with maybe quarter 2 or quarter 3 of 2020. So.
Yep, and if you go to the next slide, this is something very important, and what I wanted to touch on is participating in the PPP program disqualifies you from deferring the employer payroll taxes and from taking the employee retention credit. So like Tim said, there was only about a week where this would even apply in quarter 1. While urgency is necessary in some of this, it's also important to sit down and weigh your options and figure out what is exactly best for your company and will ultimately benefit you in the best way to keep your doors open.
The IRS strongly encourages double dipping.
Okay, so I do want to touch on this because of the EIDL. If we submitted EIDL a few days ago when the kit was a written base, should we resubmit the new form? The answer is no. Even if you did apply in those few days where the forms had to be uploaded, they are still processing your application. The unfortunate part is if you were just about to submit with the forms and now it's web-based, you do have to start over. I think.
Are you good, Marcy?
Yeah, I was going to say, I think for the interest of time, we should keep going and then we can answer a bunch of questions here shortly at the end.
Yep. So we've got about 10 minutes left, so I'm going to kind of quickly go through these, although it doesn't undermine the importance of them, but just so you know, maybe you pause this, after we're live and you have this information available you can look into. Some things to note for other business provisions are the NOL carryback period is now 5 years. So normally the net operating loss carryback is only allowed for 2 years for farms after the Tax Cuts and Jobs Act went into place. Also, NOLs under current law are limited to 80% of taxable income, can't be carried back, but can be carried forward indefinitely. Now you would be able to offset this by 100% again and carried back. So that's something important to know. We've got some immediately refundable AMT credits for corporations. The business interest expense limitation has increased from 30% to 50%. We've got immediate write-off of qualified improvement property. So with this, the CARES Act now defines qualified improvement property as a 15-year property and therefore allows 100% of improvements to be deducted in the year incurred. This is effective for property acquired and placed in service after September 27th of 2017 because the Tax Cuts and Jobs Act had somewhat of an oversight there, and this basically just is correcting it. We've also got an increase on the limitation for corporations who contribute to charities, and then the exemption for alcohol excise tax. Of course, we all kind of need some hand sanitizer and whatnot right now, so we've got the exemption there.
And one thing to mention on some of those is that some of those laws are retroactive for 2019 and potentially 2018 tax filings. So don't be surprised over the course of the next year when your CPA gives you a buzz and says, hey, we're going to go ahead and amend your returns now because this new law allowed for you to take more interest deduction or more write-off of this or more write-off of that. So again, not necessarily something that's extremely urgent, but just be aware that there are some things that are retroactively being applied.
Exactly. So now just to kind of wrap things up, we've got some Ohio changes to be aware of if you aren't already. So of course, the state, city, and municipal tax filings are now due in July 15th. The Ohio primary election's been moved. If you've already voted, your votes count. If you haven't, it's going to be completely through absentee ballots now. Also, you know, there's not going to be any public water being disconnected for 60 days. We've got some other changes happening here. If you've got like an expired driver's license or vehicle registration, that's been extended to 90 days after the expiration date. Also, there's this new thing that's in place. It's the allowance of recent nursing graduates to apply for a temporary 90-day certificate to work immediately. Of course, this is the time when we need people like that. So there's also this. Check out some of the other updates on the Ohio website. And to get into PA, you know, pretty similar. Their primary election's been moved. Same thing, if you've got an expired license, you've got some extensions here. Things happening with utilities to help out so you're not being disconnected. And then we do have some new resources and loans that are available for businesses that are in Pennsylvania. So keep these in mind. Visit pa.gov, visit sba.gov. Sure, they're going to be updating these regularly, and you can check out more details and information on that. But again, for time purposes, we'll just kind of keep things moving. Here's our contact information. If you want to reach out to us directly, you can certainly do that, and we'll be here for you. And you know, I know Jeff is going to get us those lists as he did for the last webinar. We'll make sure we're answering your questions if we didn't already, and of course, update you as more information becomes available. So with that, I mean, if we want to kind of wrap things up with our final questions, you know, then we'll be in good shape.
Yes, thanks. In the essence of time, we have a lot of questions to work through, but as Angela mentioned, we can export the log, and we have all of the questions associated with the IDs of the attendees. And so we will be following up with those people individually. I will take just a couple more minutes to answer some of the questions that have come in. There are several questions around, could you restate the notion of employee counts? So looks like there are several entities with both part-time and full-time employees. Do those part-time sum up for a full-time employee when they're calculating payroll?
So what's extremely important to remember in all this is when you're filling out your application, a lot of people are looking at this application from the United States Treasury that has the amount of employees on it. If you can go back to that slide, it might be helpful to show what we're talking about here. But what I'll say is that anytime in our world that we are filling out documents for the government, you need to ask, why are they asking this question and what relevance does this play? Because every question that's on that application is relevant. So they are asking you how many employees you have right now. The reason they're asking how many employees you have, I think that's it right there.
This one?
Go one more. I like the actual copy of the application. There you go. Yeah.
Okay.
So on here, there's in the first section, it says number of jobs. And I think that's what a lot of people are asking about because they're looking at the form and wondering what to put in there. My answer to you is wait. Don't fill anything in there yet. I would venture to guess that the answer there is going to be your full-time equivalent number of employees. But again, why it's important for you to make sure and quadruple check that answer is correct is because if you got the loan, let's say you got the loan on April 15th for $250,000, right? Then you have 8 weeks to spend $250,000 on payroll, utilities, rent, whatever, to be then potentially forgivable. That's the first phase, is that you've spent the money to be potentially forgivable. The next phase and how that forgiveness is calculated is they look at both your number of employees that you had in that period, in that 8 week period, and then they compare it to your number of employees that you had either in the same period last year or in the same most recently closed period in the fourth quarter, or it's kind of different depending upon whether you're seasonal or non-seasonal. So the important thing to consider there is that calculation of full-time equivalent employees or number of jobs in that section. You want to make sure that you understand the specifics as to what that number needs to be with your bank, with your CPA, with your payroll provider, because that will be extremely important when it comes time to loan forgiveness. Because if you had 100 employees as your baseline, and you had 80 employees in that eight-week period that your forgiveness was calculated, then the forgiveness just by that metric gets reduced by 20%. So if you got a $100,000 loan, you used all the money on payroll, but you had less employees, then there's a potential reduction of your forgiveness by the less amount of employees that you had. Again, we're waiting on a lot of clarification in regards to that, but it's important, again, to hammer home the idea of accuracy and relevance as to how you're answering these questions. So that's one that I would kind of leave blank until the last minute, until you have the 100% clarification as to what information to put in there, because that's something that you don't want to come back to bite you when it comes time to potentially get some of that money forgiven.
And so it's safe to say that everyone attending today will be added on to your newsletter list, Tim, and you've done a great job providing insights as they developed in almost in real time. So expect this communication to continue. Not only today, we appreciate everyone's attendance today, but as more information unfolds, all of the attendees, we have your contact information. We will add you to this loop so you have all this information available. I want to take this opportunity to thank each and every one of you for attending. We kicked off the Rally Around Small Business campaign just this past Monday. It's a time in which we all need to help and support each other. And the Rally Around Small Business, we ask you to nominate your favorite small business. They get active promotion, they get active exposure, and so do you. And so please nominate your favorite small business. Please submit a pep talk and pitch video. All this information is available on the Business Journal website. Anyone that asked a question today will be followed up with. You will be added to this distribution so we can keep you updated on everything as it changes. We thank you for your time and attention today. Thanks to the team from HD Davis CPAs and White Glove Payroll. And this is Jeff Herman at the Business Journal signing off on the webinar today, and expect more webinars and more information and more insights and resources as we work through this process together. So thank you so much, and I hope you all have a great day.
Thank you, guys.
Thanks.
Thank you.